What's up, traders? It is January the 30th, 2022. Hope you're having a fine weekend and a great Sunday evening. TradingView ate my first video that I just made, but because I love you guys on TradingView so much, I'm going to do another one. If you want the longer or the other version, it's on my YouTube. Check the signature below. Make sure you go there and follow me as well. So, what I want to talk about this week is, of course, the stock market, because pretty much everything's being driven by risk, whether it's stocks or crypto. But we will look at the cryptocurrency market. I also want to touch on the Bitcoin dominance chart because it really helps to address some of these theories people have that we're going to go into another alt season. I think a lot of people that are heavily invested in a lot of these alternative cryptocurrencies really want to see that, but we're going to look at the charts to see if that theory is actually going to play out. And then we're going to look at some other commodities, gold, oil, what I'm seeing in those for levels, and some individual stocks as well. So the first thing, top off, is stock market. We're looking at the S&P futures right now. We had, of course, this pullback, which I think my thesis is we bottomed out on Monday. I know a lot of people want to spread the FUD because that gets a lot of clicks, but we get a 10% pullback once every 2 years. Statistically, this was probably it. The interesting thing about where this thing stopped was the May all-time high, May of 2021, which was also the launch point back in July of 2021. You can see that here. So basically price made an all-time high here in June, May, and then this launch point right here where price went above the all-time high, came back to test it in July, and then launched from there. That is essentially where this last week we did a nice little V bottom on Monday of last week. And we basically established this range that we're in right now. Where we break out of this range is, of course, going to be important. But I really think that you have to watch at this point for the retracement level. And of course, that's going to put SPY at about 450 or the futures here to 4,500. Basically, we want to see what happens when price comes back up to test this level as resistance. We could also come back down to test the lows, but these are going to be the two things: the lows that we established on Monday of last week and the 450, 4,500 range on the futures. NASDAQ is going to be pretty much the same. We had that same pullback, at least in the scope of it. And the level I'm going to be looking for is a retest to the bottom or a pullback to the 50% retracement, which is about 1,500, 182. So that's what I'm going to be looking for in the week to come and possibly weeks to come into February. Bitcoin remains in a bearish trend. And over the last 2 weeks, it came to a level that I was watching for, which was the 50% retracement from the most recent all-time high all the way down back to the COVID low. And that's where it's basically hanging out right now, 36,000. I'm thinking that we're in a relief rally right now, but I don't want people to be FOMOing in yet. I'm not trying to keep you from missing out. I'm just saying that if this thing was going to go up to the 300s, the 800s, whatever people on Twitter were saying it was going to do, it should have done it back in October, November. You're really in a dangerous situation where this could also just either consolidate, maybe set up a head and shoulders pattern, or we could break even lower. So not to add to the FUD here, but what I see is that right now we've caught support at the 36,000 range, which is the halfway point of the last 2 years of movement. It's really critical that we hold here. If we don't, well, it gets kind of ugly pretty fast. Ethereum, same thing, holding at its 50% retracement level here as well. So everything has sort of settled at this key support, and that's where it's been sitting for the last 2 weeks. Maybe this week we'll see some movement. I don't know. We've had a lot of movement. Market tends to take a little breather sometimes. So this could actually be a little bit less interesting of a week, but stay alert just in case. Gold's in a consolidation. I know a lot of people to start the year have been wanting to see the gold prices move upward for them, if they are really big gold bugs, they're usually the people that are sharing the market is crashing, the economy is going to crap kind of narratives on social media, but I don't see it in the charts. In fact, if I go out to eat or if I go out in traffic, maybe it's just my local area, maybe it's just anecdotal, but nothing really bad is happening in the economy right now. We're not going to go to war with Russia. It's not going to happen. There's nothing like a pandemic, or at least we're used to it by now. There's no global credit crisis like 2008, and there's no planes flying into building, fortunately, like in 2001. These 30% crashes in the stock market that people think we're in the middle of, I just don't see it. I think we're just in a statistical pullback or correction, excuse me. And so for the economy to collapse, for gold to go up, just don't see that happening. Gold tends to form these consolidations after big moves, and this is we're looking at the weekly here. Gold could consolidate around this 800 range, like it consolidated around the 1300 range from 2013 to 2019. It could also break lower, like it did back in 2012. And so I would only be interested in looking at gold if it breaks below the 1600 range or breaks into the 2000 range. Basically, this is the zone that it can operate in, and I'm not going to get that interested in it. Oil, I still think oil is on its way to 100. But that being said, the reason for that is, of course, that's where it liked to hang out back when I started trading almost 10 years ago. That's a natural level for it to try to get back up to. That being said, I think the risk reward on the upside of oil is starting to get a little less and less. We have earnings coming up for ExxonMobil, ConocoPhillips, two stocks that I own. I actually have options in ExxonMobil, but because earnings are coming out pretty soon, I'm going to close them and not get that IV crush. The profit is there. There's no reason to give it up. I'm trying to flip a coin, but I do think that oil has a little bit further to go up. But I'm not a buyer at this point because the risk reward is not where it needs to be. The dollar. Last week we looked at the dollar. It was inside this range right here. I said that it was probably going to retest this high. It has done that, and it has broken higher. On the weekly, it is now in a confirmed bullish trend. The dollar is actually going up, which makes sense because people are assuming that interest rates are going to go up, which is bullish for the value of the dollar. That also means that the value of bonds is going to go up the reverse. I always get that confused. TLT is, of course, the one that we want to look at. The value of TLT, the value of bonds are going to go down as yields go up, as interest rates go up. So all this talk over the last few years of the dollar going to zero because of inflation, the dollar index is a cross section of other world currencies. So how the dollar is valued versus other world currencies is actually going up. More people in the world want US dollars. It's kind of the opposite of inflation. Now, finally, I wanted to touch on, are we going to see an alt season? Well, this is the BTC.D, which is the Bitcoin dominance chart. It shows the market cap of Bitcoin itself relative to every other currency. And back at the beginning of 2021, it was over 50%. That was the majority of wealth, the majority of money that was inside of cryptocurrency was inside of Bitcoin. But that trended very strongly as 2021 developed into other currencies. The DeFi, Web 3.0, everything like that was happening to make people put their money into other things other than Bitcoin. And now it kind of settled down around the 40% range, which it held for most of the last part of 2021. Now, of course, we have a little bit of inversion. There's a potential here of a trend to the upside, and that makes a lot of sense if cryptocurrency goes into a bear market. So what people need to do is they need to look back at history and see that when cryptocurrency enters into a bear market, people treat Bitcoin as the safe haven. Though Bitcoin may go down, it will go down less than other more volatile currencies. And so the dominance of Bitcoin, where people want to have their cryptocurrency holdings, goes up. And that could be what we're seeing. It's not in a fully confirmed bullish trend just yet, but we could see that inversion happen this week. And that would actually be the opposite of what people are thinking in terms of alt season happening. More people are going to be wanting to go into Bitcoin as a safety with declining cryptocurrency prices. So, what I'd recommend people to do is start looking at some of the cross instruments, things like Ethereum, Bitcoin, Litecoin, Bitcoin, whatever currency you're trading versus Bitcoin. Look at the charts and see where it stands relative to Bitcoin. And that could give you a little idea for what people are starting to do. And you can see it already in the Bitcoin dominance chart, but in the individual charts like Ethereum, Bitcoin, Litecoin, Bitcoin, Monero, Bitcoin, you can see that relative to Bitcoin, these currency values are going down. An alt season could start and this could reverse, but pay attention to your favorite cryptocurrencies versus Bitcoin right now. That would be my message to traders. Hopefully, we'll get a good week. My other message to traders is to really take advantage of what we have going on right now, this January and into February. This kind of market condition, even though it looks choppy, there are some major intraday trends in here. Like in a morning, in a single morning, the S&P can move 10 points, or in this case, the futures can move 100 points. These are some major moves. In the dog days of summer, where volatility really dries up historically, you can not see a 100-point move for a month. If you are taking some losses this month, I encourage you to get back on that horse. Take advantage of this opportunity now in this month, because this is where the big trends can happen. And if you're on the right side, even if you're on the wrong side and you have stops, you can reverse. This is where you can make the money back when the market is making these big ranges of moves. You won't have an opportunity if you miss this first quarter in the summertime. You'll have to wait until the last quarter. So get it in. That's my message to you guys this week. So trade wisely. And we will see you in the next video.